The other section would be employment, and this is for employees, right? They're going to ask you for your um, last employment certificates, what we call them, the pay slips.
Oh, okay.
Yeah, so I'm getting my mind back to when I was an employee, but yeah. So they're going to be they want a certainty around your income status, right? So it's why it's really easy with employees because generally they're seen as more secure as opposed to businesses. But you and I would argue differently to that because as a business owner you can see what's coming in and going out, so there's more confidence. But banks, they want to put you in that little hole, and PAYGs why they ask for those pay slips.
Also, sometimes doctors and lawyers have an easier time. I've heard can get better circumstances from the banks when they're going for their borrowing.
Yeah, that's a whole. Well,
That's
that's not really. I'm not going to say whole other topic and just keep pushing people to the future. But if you are a doctor or a dentist, physios, if you've got that, like I call them recession-proof employment people, basically, they get better loan-to-value ratios. So most doctors, nurses, they can run off a 95% loan-to-value ratio generally. And obviously, this is all general advice, so you got to speak to everyone's circumstance is different, right? So speaking to a really good mortgage broker and an accountant is important at this stage. But you're right, they do. They have more favourable lending terms because they're less risky. Yeah. Everything from a bank perspective is assessing your risk. So keep that in the back of your head.
And banks and sometimes people will get frustrated with banks. And maybe I should change sometimes to a lot of the time, but that's because what you personally may think is risky or not risky is not what the bank considers risk. For example, you mentioned employees versus owning your own business and what's more risky. The banks have their own lens on how they perceive risk, and we're playing a game with the bank. So we need to play by their rules and accept it, I guess.
Yeah. They say property's a game of finance with a few houses thrown in the middle of it. So
yes,
you just got to play their game. It's just like tax, right? You got to pay tax, but there's more efficient ways to reduce your tax, and that's just the game of life, isn't it?
It is. What other things do we need to have prepped?
Look, when you go into a broker, getting your pre-approval, they're going to want to know, obviously, your income, your expenses, as I mentioned, but also if you have any other debts. So called HEX debt, HEX help these days, university debts, car loans, personal loans, anything on that nature, they're going to be seeing that obviously it's a liability and it's going to reduce your borrowing capacity. So your mortgage broker is going to be asking for all this stuff. So that's the whole purpose of this, is to say, look, be prepared. This is what they're going to be asking for, because you can just go straight to your broker, have all the information already as they've requested, or before they request it, and then it's just straight in, and you're going to fasten your track to a pre-approval and understand your borrowing capacity to get to where you want to be, which is purchasing the property, right?